Hi grade 12s, welcome back to another one of our video lessons. So today we're going to continue with term 3's work, which is unit 1, taxation, chapter 8. Okay, so we're on page 214. Alright guys, so we're going to start with taxation. I'm going to read the first bit and I'll explain as I go along. So income tax in any country includes all taxes levied on all income and profits received by individuals and businesses. This tax is the national government's main source of income. In South Africa, SARS, the South African Reserve Service, is responsible for collecting taxes. So in South Africa, the government collects taxes and they spend those taxes on public spending such as roads and hospitals and education and whatever it is that they spend on. Okay, so whatever you earn throughout the year, you need to pay tax on that income. And in South Africa, we also pay value added tax, which is VAT. So we kind of get taxed double in this country. We get taxed on the money that we earn, and then we also pay tax on the goods that we buy with that money. Okay, so it's quite a heavy tax that we pay. All right, so in South Africa, a person is liable for income tax if his earnings are above a certain tax threshold amount. This threshold amount for 2011 was 57,000 Rand per annum. So what that means is that in 2011, if you earned anything below 57,000 Rand per month, or sorry, per annum, you wouldn't have to pay any tax on that amount. So they gave you some amount that you are tax exempt from. But now, if you look at the current tax tables, there is no such amount. So whatever you earn, you are getting taxed on it. Okay. Per annum for people below the age of 65 and 88,528 per annum for people over the age of 65. Income tax is calculated using a sliding scale. All right, so that's pretty important in South Africa, is that it works similar to the way electricity works or the water works. So the more you use, the more you pay. So the same thing applies for income. The more you earn, the more you pay. But it doesn't mean that the more you earn, the more you pay on your whole amount. No, you go up in tiers. Okay, so let's say there's a first tier that up to 100,000 Rand, you pay 10% of tax. But if you earn 150,000 Rand, anything above 100,000, you pay 15% tax, and so on. So basically, if I earn 150,000 Rand a year, on the first 100,000, I'll pay 10% tax. And on the next 50,000, because I now go into the second bracket, I'm going to pay 15% tax. Okay. So in South Africa, I think the highest tax bracket is 45% tax. So I think it goes over, I think it's like 2 million or something like that. We can check. But yeah, so the more you earn, the more tax you end up paying. Now, I don't know if you guys ever heard anyone say or complain that they've got an increase at their work, and now that put them into the next tax bracket, and now they actually end up earning less money. Okay, I've heard that before when I was still in school, and I didn't really understand what that meant. But in reality, that never happens, right? Because if you earn more, you're only getting taxed more on that portion, the extra portion that you earn. So your total income is still increasing. You know, it's you can never get an increase and now you're paying more, so you're at the end of the day you get actually less money than before the increase. No, that doesn't work that way. So those people didn't really know what they were complaining about either. So it's just on that extra amount you pay a higher percentage tax. Okay. All right, so let's continue. From the information that a person gives to SARS in an income tax return, they conduct an assessment to show whether the taxpayer owes SARS money or whether SARS needs to refund money. So also when you're working, your employer usually pays tax on your behalf. But you still have to complete an income tax return because you might have earned some other income somewhere else, right? So you put everything together, they now checking, oh, okay, how much did your employer pay on your behalf? How much do you still owe? Maybe we charged you too much. Maybe you still owe us a couple of thousand Rand. So that's the point. Okay. Okay, so they conduct an assessment to show whether a taxpayer owes SARS money or whether SARS needs to refund money. SARS follows these steps when calculating how much income tax a person owes. So number one, determine the gross income for the individual. So for residents, gross income is the total amount of worldwide income received. All right, guys, so it's not only the money that you make in South Africa, it's worldwide income. It's everything that you made, and you are now living, you're a resident of this country, so you have to pay tax. So in cash or otherwise by that person. Number two, deduct exempt income. Certain exemptions are set out in Section 10. SARS then calculates a taxpayer's income by deducting all amounts that are exempt from tax. For example, retirement annuities, pensions, or provident fund contribution from the taxpayer's gross income. All right, so they take away all the income that is deductible that you don't have to pay tax on. So then number three, deduct allowable deductions. SARS subtracts certain allowable deductions from the income, then adds taxable gains, and then subtracts other deductions. What is left over is taxable income. So then they basically look at what else is tax exempt and what else do they need to add. Number four, multiply the taxable income by a rate. SARS taxes people on a sliding scale. Once SARS has calculated the taxable income, they use the applicable tax rate to calculate the tax liability, meaning how much do you actually owe them. Number five, subtract rebates and credit. Finally, SARS subtracts the rebates and the medical scheme tax credit, and then you have your final amount of what you owe to the government. Okay. Now, what they do is they take away the amounts that you've spent on medical care on yourself. So that is also not taxable income. So if you spent on say your medical aid didn't cover a certain portion of whatever operation procedure you had, you can take that as an expense and deduct it from your income and not get taxed on that portion. Okay. All right, guys, exercise one, refer to the guide to completing your individual income tax return on page 377 to answer the following questions. Okay, guys, you are in matric now. You're going to be working next year, hopefully. You're going to be earning money. You have to pay tax because, guys, it's quite interesting that without a tax number, you can't really do anything in South Africa. You can't buy a house, you can't buy any property. You'll struggle to buy a car on credit because you need to pay tax. You have to be employed. So paying tax is a required thing, and it is good. Okay, so exercise one, I want you to go to look at that guide and answer exercise one, go through the questions, read that information, and basically answer that exercise. You guys need to be aware of how these things work and what you need to do. All right, let's continue. Next page is payslips. Every person who is employed by a company receives a monthly payslip. The Basic Conditions of Employment Act 97, Section 33 states the requirements of employees and employers regarding payslips. The purpose of a payslip is to keep a record of information about remuneration. The employer fills in the form and the employee receives the payslip. The employees and the employer's details are stated on each payslip and include the employer's name and address, the employee's name and form of employment, the period for which the payment is made, the gross or total salary or wage, any deductions, so that could be your pension or medical aid or whatever else deductions you might have, so like UIF, the employee's net salary or wage, the actual amount paid, so after all the deductions, the net salary is what the employee actually receives in his bank account, and the calculation of the total if necessary. Okay, so basically it gives you a nice summary of what is going on with your money, how much did you make, how much did they deduct, what portion goes to tax, and what portion is actually ending up in your pocket. Okay. Right, guys, so we have a worked example on page 215. It says, using the payslip below, answer the questions that follow. All right, so again, on the payslip, we'll see all this usual information. It's the details of employee, employer, how much was paid, what are the earnings, what are the deductions, what is he getting back. So this is an example of a payslip. Let's answer the questions. So number one, I'll work with you through the worked example, and you guys are going to do exercise 1 and 2 for homework. Okay. So number one, what is the name of the employer? So if we look at the top right, there's the logo ELG Environmental Services. Okay. Number two, when did the employee start this job? Write in the form of day, month, year. When did he start the job? Okay, so let's look. There's two dates on that statement. There's a salary period for which he's getting paid, and there's also date employed when he initially started working for this company. And that was a 1st of September. Okay, 8, June, July, August, sorry. Number three, what is the period for the payslip? Well, we just spoke about that. The period is from the 1st of September to 30th of September. Number four, what is the gross salary for the employee? Okay, the gross salary is, let's look. So there's basic pay, there's also travel allowance of 1,000. So basically the gross salary is all the money that he's getting before paying tax, before any deductions. So the answer that I get is 10,500. That is all the money that he gets. Okay, 9,500 for his basic pay and 1,000 for travel allowance. All right, number five, state all the relevant deductions and their amounts as well as the total amount for this employee. All right, the total amount is your net pay, okay, what he gets back. The deductions we can see they are on the right under deductions. It's medical aid 750, pension fund 351.25, a loan 500, UIF employee contribution 105, tax regular earnings 946.20, tax fringe benefits 815, and tax allowances 115.70. All right, so that's pretty much all the deductions that go off. The total of those deductions is 2,776.30. The total earnings is 10,500. If we subtract the two, we're going to get the net pay. All right, so number six, calculate the total amount paid in tax. All right, well, we can see there are three tax amounts. That's 946.20, 815, and 115.70. We add all that tax together and we have the total tax amount. Number seven, how much does the employee pay for UIF? Okay, so that's unemployment insurance fund. So that is 105 Rand he pays towards that. Okay, guys, unemployment insurance fund means that if you get unemployed and you have been working and paying your contributions and you're unemployed, you can claim some amount from the unemployment insurance fund. But it's not a huge amount right now. I mean, not right now with the corona, but before it was like maybe 500-600 Rand that you could claim. Okay. With the corona, you can claim about 40 or 50% of your income once you've lost your income. But that's due to the government splashing the 500 billion in towards this pandemic thing, which, by the way, we're going to end up paying for the next 10-20 years with our tax money. And yeah, so it's not a good thing. Right, let's continue. Number 8, what is the total amount paid to the UIF fund? Okay, so this is the UIF fund. This can be found, let's see. So I think they're trying to figure out what is the amount. So number 8 answer says 210 Rand. Remember, the employee pays the same amount that the employee pays. All right, so a little bit of a trick question. Let's see where they actually say that. So that's in the keywords. If we read keywords on page 215, UIF, Unemployment Insurance Fund, employers pay 2% of an employee's gross salary to the UIF every month. 1% is usually paid by the employee and 1% by the employer. So 1% is being shown on this payslip. So together it is 210 Rand that's being paid. Number 9, what percentage of the employee's gross income is paid into a medical aid fund? All right, so look at the medical aid fund. So medical aid is 750. And then we want 750 divided by the gross salary, which is 10,500, multiplied by 100 to convert to percent, and we get an answer of 7.14%. Number 10, what is the employee's net income? Okay, so previously the totals that they were talking about in the previous questions was just the total for deductions and total for earnings. Now the net pay is, well, we can see it's 7,723 Rand 70 cents. Okay, guys, that is a typical payslip example. We've done a few of these before when we were doing bank statements and all sorts of other statements. This is another one of those things. You have to learn how it works. So what I want you to do for homework is to do exercise 1. Go through the guide to completing your tax return, answer those questions, and do exercise number 2. And yeah. All right, cool, guys. Thank you very much. I hope you enjoyed the lesson, and I'll see you next time.